Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, September 20th, 2024. Ron Quaranta here with my amazing co-host and friend, Mr. David Brill. Joshua Ashley Klayman should be joining us. I'm not sure where the private jet is, David, but we will figure it out. For everyone who's joined us, thank you for being here. If you're on LinkedIn or Twitter or YouTube, if you've got questions for David or I, please feel free to put them in the chat, where it's really great to have you join us. And obviously, our usual disclaimers, please keep in mind that we're not giving any sort of accounting, investment, legal, tokenization, tax advice. And then everything David and I are talking about is really our own opinions and does not necessarily represent the opinions of our firms. David, as always, it's good to see you, brother. A tumultuous week. Let's kick it off with what you and I have been texting about all week. The Fed cut interest rates. Let's dive into that pool. 50 basis points. I was a little bit surprised. But I'd love your thoughts on what this means for the economy, what this means for crypto, and where do we go from here?
Yes, so myself and 116 or 106 economists were also surprised that we won 50 bips.
Yep.
Look, I think we should have done this in July. We talked about this. I think broadly speaking, the job market, I think in the white collar space, with some exceptions, is slower than I think they would like.
Yeah.
I think a lot of the jobs that have been created, as we've talked about, are temporary jobs, are government jobs, and we still can't really figure out how that many government jobs are being created.
Yeah.
So I think that although they haven't really said it, I think that the job market is slowing faster than they would like. I think that the level of inflation we're at now is something that they're comfortable with, although they'd like to see it lower. So I think they took the opportunity here to go 50. I still think they should have gone 25 in July and 25 here.
Yeah.
Election aside, I'm not sure how I feel about 50 bips right before an election, but
Yeah.
all things being equal. What about you, Ron? Were you surprised?
I was surprised, and you and I have had this conversation a lot, and anyone in the audience, if you've got opinions, we'd love to hear it. Interest rate changes like that always strike me as a bit panicky.
Mm.
And, it didn't seem that the market responded that way. The interest rate cut happened in the afternoon on Wednesday. The afternoon for the remainder of the trading day was kind of quiet, and then the market took off yesterday. I think people are taking some profits today. To me, it's reflective of a couple of things. One is, I agree with you. I think they should have cut earlier in the summer. I think they are underestimating the challenges in the employment market. And the reason I say that, David, is something you and I talk about a lot, which is the data almost is always lagging and subject to correction.
Yeah.
Our heads exploded about 2 weeks ago or a week and a half ago when job data was corrected for 800,000 jobs. In a normal world, that would be a cause for pause to understand what's actually happening here. So I agree with you. It was a little bit shocking. It feels like the other thing I'm worried about is we're old enough to remember some of this. I remember being a kid in the 70s and the 80s when we'd see really bad inflation. And as the inflation rate comes down, regulators and the government begins to say, we've beat inflation. It's finally beaten. I'm not sure I'm comfortable with that yet. I'm not sure that it's worth us saying immediately we've beaten inflation. It's certainly gotten better. But, to your point, has it gotten better for day-to-day folks with energy, with fuel, with, the owner's equivalent rent, which is essentially a made-up statistic that doesn't really reflect the costs people have just to live? So again, I don't want to sound down or cynical. It's good to see interest rates coming down. That opens up capital expenditures. It opens up a little bit of spending bandwidth for consumers. But I think we still have a long way to go, and it's a very dynamic market.
Yeah, and also, we're seeing slower increases off a much higher base for these costs. And I also think another thing that some people haven't really talked about as much as, we saw wage gains for lower and middle level workers, but a lot of those wage gains have been eaten up by the higher costs and inflation that we've seen.
Right.
So while it's great that they're seeing higher wage gains, if it's getting eaten up by higher costs, they still haven't really moved very far from where they were before.
Right.
So I agree with you, Ron. I think that people are still being affected. I do think in certain areas this will be helpful. Like our housing market's been pretty locked up.
Sure.
A lot of commercial real estate has to be repriced, and loans have to be redone. So these are meaningful. I just wish it was done in a more, in a more gradual approach, and not just sort of coming right out of the gates with 50. I think you also now create expectations that we're going to get another 50,
Mm.
in the next, um, cycle of like, in which could be 1 or 2 days after the election. And I'm not sure that I, in this moment, think that that's, an expectation that we should have.
Hmm. It's also an international conversation, David. So, we'll bring it to crypto because I think there's an
Yeah.
important macro conversation there. But Bank of England maintained their current interest rate, didn't cut. Bank of Japan, and that's a very different cyclical story, increased its interest rates. I think it was 25 basis points. So we're really beginning to look at this broad macroeconomic interest rate chess game
Mm.
because depending, money wants to move to return and yield. And I wonder in the macro sense, what does this do to investment in the States or in Europe versus Japan, for example? The other thing, David, that was interesting was come yesterday morning, crypto seemed to go all risk on. And, joking aside, you and I text each other about price moves and where things are going. But it was a pretty astonishing rise, including a good swath of the altcoins. What was your take on that kind of risk on sentiment?
Well, look, I think the crypto market's been waiting for rate cuts and was teed up accordingly.
Hmm.
And like we've talked about, altcoins have been, you know, practically speaking, since March or April, in a bear market. A lot
Yeah.
of quality altcoins have been down 50, 60, 70%.
Yeah.
A couple that you and I like, and I'm not calling them out
Yep.
individually, but are down more than 50%. And we think they're high quality projects.
Yeah.
But they've seen severe retracement. So as risk on comes on, there's two things at play. One is people want exposure to Bitcoin and crypto, they go to Bitcoin. But I think those who are a little deeper in the space and see more upside perhaps in some of the altcoins, think this is a sign, okay, freer money is coming, risk on somewhat. And there are some really good projects that are, not Bitcoin or Ethereum, and they're going to get attention.
Yeah. David, in the context of all of this, and I haven't looked at the data, I'm not sure if you have as well either. The Bitcoin spot ETFs, the Ethereum spot ETFs, has the anticipation of interest rate cuts and kind of expanding money being able to be spent on riskier things, has that impacted ETF flows in your mind?
Well, I think the ETF flows were front running this. You saw bigger
Yeah.
flows, I think, at the end of last week and the beginning of this week. And I think you'll continue to see that. Again, like a broken drum, there's a lot of folks who don't have access to those ETFs from the wirehouses.
Yeah.
And at some point, they will be unlocked. So
Right.
I think you're seeing it was a good indicator that they were, a lot of volume was going into it and assets prior to the 50 bips hike, because I think they were anticipating that.
Right. And when you look at the wirehouses, and you and I have talked about this many times, I think it was several weeks ago, Morgan Stanley had said they'd open up some of the spot ETFs to their, I'll call them the high net worth
Yeah.
clients. Do you think that's going to be the trend for the foreseeable future, that it won't get down to the retail Robinhood user level? And I'm just using Robinhood to paraphrase.
I
Do you think it'll be in the high net worth or institutional space for a longer period of time?
mean, I hope that's not the model. I mean, I
Yeah.
understand if that's how they feel comfortable. I'm not a big fan of individuals not having access to products that they want, especially ones that are already trading on, that have already been approved by the SEC. Like, I'm really
Right.
not a fan of that at all. I think everybody should have access, especially, you have a BlackRock and a Fidelity and some other really good sponsors ETFs. Um, you shouldn't have to have a different account just to get access to them. Oh, there's Josh.
The
Sorry,
plane
guys. I
has
got
landed.
caught in a bit of an urgent thing for a client.
We're glad the private jet landed safely and you're ensconced at the compound now, Josh. Josh, we were just talking. Great to have you join us. And again, for everyone in the audience, thank you all for being here. If you've got questions for Josh or David or I, please do put them in the chat. Josh, just to catch you up, David and I were talking about the big interest rate cut, and we've been talking crypto and macro and prices and ETFs. David, I want to end off with one other thing, you mentioned this a bit earlier, it's an election cycle. We've got presidential candidates hitting up, crypto Bitcoin bars and buying burgers. We've got another candidate that's not particularly clear yet, it seems, on their policy. Where do you think the price action is, Dave? And again, we're not going to predict particularly, but where are the flows in the crypto space between now and the election?
That's a great question. Well, I'm going to look at it in two ways. From the risk-on perspective, when we saw the 50 basis cut, 50 basis point cut that occurred,
Mhm.
those people who wanted more risk exposure will go into Bitcoin and some will go into Ether and the altcoins, regardless of the election.
Right.
I think there is a group of people who will continue the exposure they have, but may temper what they do, um, until they get a sense of who's going to win the election or who they think is going to win the election. The last thing I'll add, though, is that if we reach an all-time high before the election, I expect a lot of people to FOMO into crypto, into Bitcoin, into other crypto, feeling that they'll have missed the boat. So
Right.
I've kind of given you sort of a three-path answer, but I think those all apply.
I will share with the audience that David and I have been texting the better part of the week, where I track Bitcoin's price as I worry about what steakhouse he'll pick. We'll see where the bet goes between now and the end of the year. Josh, please weigh in here, and it's good to have you.
Thanks so much. So I have a question for you guys, just
Yeah.
on that point about people flowing in, right,
Mhm.
and risk on. Um, one of the things that surprised me when I was looking at it yesterday, which you guys know because I sent it to you, was that despite the rate cut,
Yep.
mortgage rates were actually up.
Mm.
Yeah.
And some had hypothesized that that's, a temporary thing because people didn't want a million mortgage applications flowing in on a single day or something like that.
Yeah.
But what what do you think in terms of timing? Are we likely to see, something in the very short term with people flowing into crypto? Or is it something where we may have some peculiar uh, results in the meantime?
I think so. There are a couple of things there on the mortgage rates, Josh. If I could, that's a really interesting point because we all have friends and colleagues who are looking at mortgage rates. I have more than a couple of family members who are like, "I've got a refi, but interest rates are ridiculously high, and I'm not seeing the price come down." It's a very complicated market, so it does take time for these interest rate cuts to disseminate down through to retail mortgages, for example, to banks, and certainly to credit card companies. They're not going to be lowering their rates. With any sort of speed. And I also think there's a market sentiment of there'll be more interest rates. So why would I refinance now when if I wait 6 months, I could get an entire percentage point lower? So it's a really good point, Josh. And I think it does take time to percolate through, particularly the retail users. The crypto stuff. I agree with David. I think when we start approaching all-time highs, and we've seen this trend before, people will freak out and FOMO and start. I've got a couple of family members when I tell them, I don't give them advice. This is not advice for anyone who's watching, but look, you should dollar cost average into certain cryptos. It really is the wisest move. Invariably, Bitcoin, David, and you and I joke about this, will hit 64, 65, whatever it may be. And I'll get the phone call saying, I'm going to buy today. Like, why would you buy today? You could have been dollar cost averaging into it for the past 6 months. But that's kind of my take. I'd love David's perspective as well.
Look, I agree. The thing is with Bitcoin, we see outsized gains on a few days a year, or maybe a dozen days a year. So if you're sort of trying to play the market and you don't catch those, maybe we'll say 8 to 10 days a year, you really could miss out on a lot of the gains. I think dollar cost averaging is not sexy to a lot of people, but I do think for people who don't have exposure to crypto and who want to gradually get exposure, I agree with Ron. Like dollar cost averaging is a way to go. And what I also say to people is if you want a dollar cost average, if something is sold off, like had a bad day and sold off, that's a great time to go in and do your dollar cost averaging.
Yeah, that's right.
Because things are volatile, and same with the stock market. If you want a DCA and you want to do it more actively, there's a day with a 3% sell off. That's probably not a bad day to go in and buy a little if you're dollar cost averaging. I think the same applies for crypto.
So Josh, was the Josh Klayman family office like, taking some profits yesterday, or What were your thoughts?
I mean, I I don't know that I have any thoughts anymore. I feel like, yeah, there's a lot of movement. But I mean, I keep thinking back, like again, like I know this isn't mortgage rates, but what you guys have been talking about, what we've been talking about on prior calls about, oh, look at the economy, look at all the amounts that are going into credit card
Yeah.
debt,
Mm.
et cetera, reaching, I believe, new highs.
Yeah.
Although perhaps I'm mistaken on that, but yeah. So when I hear stuff like, okay, well, credit card companies aren't going to be changing their interest rates anytime soon, potentially, although who knows? I do wonder, like, well, then what is it for? And maybe it's just, borrowers waiting on the sidelines and expectations. I mean, I had been reading something that suggested, I forget who even suggested it, but who suggested that, Trump has already made clear that if Trump wins the election, Powell will not still be in the role, and so that perhaps the 50 basis points was decided upon because have to try and make the other side happy. But who knows,
Yeah.
right? Who knows? Just how much is hedging and how much is. But if it's not going to reach the retail for a bit, one has to wonder, what exactly
I
is happening.
Yeah, Josh. I'm with you on that, but these benchmark interest rates have a ripple effect across different aspects of the economy. It
Yeah.
affects how banks repo amongst each other. It affects commercial paper. It affects public and private credit. You're absolutely right. Like, and it feels like the everyday person benefits last in some of this, but this is a $25 trillion economy. It just takes a little while to percolate through that system. The opposite side of that, it took a while for inflation to show up, and then suddenly, bam, it was here, approaching nine plus percent. But David, yeah, we have econometric, we have macroeconomic conversations a lot. Josh, we were talking about overseas interest rates. I never thought Bank of Japan and Bank of England would weigh in on one of our live streams, but it did.
Well, I will say, I will share that my crypto family office was a buyer before the interest rate announcement because I felt like it was going to be bullish either way,
Yep.
for crypto holders. But look, we covered it before, Josh, but I still think there's sort of a tale of two economies going on here. I still think middle and lower wage earners are really having a tougher time. And I think if it wasn't an election cycle, it would be a much more reported story than it has been. And maybe it gets more traction after the election.
Right. David, Josh, let me raise one other thing. And again, ripping up the script, which we would do every single week at this point. But I saw the news article because it really is interesting. We have I don't want to call them short-term conversations, but David, Josh, we talk about on a week-to-week basis, kind of the price movements, the money flows, who's getting in, who's getting out, and why. And then I see that Michael Saylor and MicroStrategy spent almost another $500 million on Bitcoin. And you could argue Bitcoin's not particularly cheap given the 30-day moving average right now. So there really is this long-term, he's thinking 5-10 years out, which is a really interesting take. David, Josh, I don't know if you saw that article, but he keeps buying in bulk no matter what the price.
He has created this model where he's able to do these convertible notes and just purchase, fund it very cheaply. I think he got it converts at a certain number and it's under 1% interest.
Yep.
More power to that team and to Michael Saylor. Like, he's created a great model and he's a believer, and he, there's no hedging with him, so he's a one way up. But I respect the willingness to sort of have a thesis and to execute on that thesis.
And to Josh, your point, over time, he'll be able to do those notes at a cheaper interest rate over time. So the delta between what he's financing and where Bitcoin might go in his mind must be growing.
Yeah, I mean, who wouldn't like to have 1% borrowing and and almost infinite amount of runway, because of how much he owns and how much in profit he is to continue that.
And it is interesting. Go ahead, Josh. Go ahead.
I was just gonna say, like, when you think about how much he owns, which didn't it say like at 1%, like he exceeded 1% a while ago? Like, I recall us talking about that.
Yep.
I guess a question to my mind, not that I'm doubting anyone's business strategy or questioning it, but I'm just curious, like in terms of parties, like what maybe, I mean, perhaps Bitcoin is different because it's not thinly traded as many other tokens may be.
Yeah.
But I do wonder, like, to the extent someone would want to sell en masse, like, not that seems to be wanting to do that. I just do wonder, like, when you have large holders,
Yeah.
how many counterparties do you have?
I mean, in a broad and deep market, you can imagine there's going to be someone who's going to want to be on the other side of the buy trade. And, I'm making the assumption he's not posting these trades to Coinbase or Robinhood, right? He's going to dealer
Right.
desks and he's getting preferred rates as you'd expect an institutional buyer of some kind of equity, for example, to do. David, I'm sure you see it the same way.
Yeah, a lot of Bitcoin miners are continuing to sell to fund their operations, Josh. So that's a pool of consistent sellers. I mean, I personally wish they would hold some on their balance sheets because I think that would diversify their positions a little bit. But that's a pool of active sellers who are selling on a consistent basis. So he may have, arrangements with some of the miners, through a third party to just buy some of the Bitcoin that they're mining. But that's one pool of sellers that you'll see on a fairly consistent basis.
Yep. And David, the other side of a lot of these also, particularly for the OTC stuff, I've got to imagine there's a pretty robust lend borrow sort of position. I'm not talking about the lending and staking we see in crypto, but in the same way you look at equities, lend, we call it stock loan, stock borrow. I'm sure there are some OTC desks that are managing that for them as well.
Yes, agreed. Although I think it would be a very risky time to be.
Yeah.
Just with everything that's going on, it would be a risky time to be short, it feels like. But look, everybody's hedging different positions. But I would say, Josh, miners will sell on a consistent basis. So that's one pool of folks who are going to be sellers to Michael Saylor, just continuing to accelerate his holdings.
David, Josh, thank you so much. I think we've got other things to talk about. Josh, I'd love to pull you into this because it's not a live stream unless we talk about the regulators. And I think we didn't cover it last week. It's all becoming a blur because the three of us meet across so many different meetings. SEC taking another whack at Binance in an amended complaint. Can you tell us a little bit about what that change was?
So, I mean, there was a lot that happened there. I think maybe one of the things that has shown up in the media and also on X is the footnote 6. That was actually not in the amended complaint, but actually in the filings contemporaneous therewith, where it looked like the SEC was hearkening back to what the judge recently said in the Kraken case. Sorry, the fly is back. Perhaps not the same one. Where maybe it's not a fly.
A drone.
But where there was actually a bit of an apology from the commission saying, apologies if we have, this is a paraphrase, caused any confusion for using the term crypto asset security.
Right.
And I think where that kind of draws from the Kraken decision more recently on, or recently rather, from the motion to dismiss decision, was that the judge said in connection with that, the use of the term crypto asset security is confusing at best. Right? So it's interesting. There were some other things in the footnote that I think caught a lot of people's attention as well. I'm just plugging in my computer. One of which was the statement, which of course we've seen in cases since Telegram, possibly even before, where it was clarified that the token itself is just it's just a string. It's an alphanumeric set of, a string, right? It's not the crypto asset itself, holding aside whether you might have something that actually is representing a stock or a bond, like holding that aside for now. But a crypto asset, as we know it, that's not the security, right? It could be the subject of a securities transaction from time to time under certain instances in the view of the SEC. But they seem to be changing tactics on that, right? And kind of using some of the language and imagery that amicus briefs and litigants have used on the other side. So what I think is really interesting also on that footnote, if I think back to it, is that towards the end of it, my recollection is that they said, we're not trying to make the argument that a crypto asset would be the subject of a securities transaction forever in perpetuity, right?
Right.
We're saying that, and this is just the SEC's view, this is not Josh Klayman's view, any of our views, anyone else's view necessarily, that the circumstances, the economic realities, and other sorts of things alongside have not changed since the time of the initial issuance or offer and sale, right? Why I think this is meaningful to me, and maybe I'm being a little too optimistic, is that more recently, the SEC has said things like, oh, if there's an ecosystem, this whole ecosystem theory, which how do you get away from having an ecosystem? Right? This language saying, we're not saying it's in perpetuity and, the circumstances haven't changed. That sounds to me, in a way, if you follow my logic at all, a little more like the SEC back at the time of the Hinman speech and at the time of the April 2019 investment contract analysis of digital assets, where they had a concept that recognized that circumstances change.
Right.
And so I just think it's very interesting. At the same time, my recollection is that there was a settlement. I believe it may have even been the eToro cease and desist order, where they actually, nonetheless, on I think either the same day or substantially the same day, granted it's a different part of the SEC, I believe they used the term crypto asset security in that.
Yep.
And so I think it's a bit of a mystery.
Josh, thank you so much. David, I know we've only got you for 2 or 3 more minutes. The yacht is waiting. David, weigh in on some of what Josh is coming. And Josh, really good recap. Thank you so much. And David, let's tie that into some of the testimony we had seen at the House Financial Services Committee with some folks who were pro-crypto and someone who was particularly anti-crypto. And it was the chief legal officer of Robinhood who noted, we had gone into the SEC for multiple meetings over multiple months and hundreds of thousands of dollars, had substantially good progress, and received a note from the chair's office saying there's no point talking to you anymore. And a couple of days later, there's a Wells notice. To Josh's commentary, David, is this inconsistency across the SEC par for the course in operating with a regulator or working with a regulator?
I don't think it's been par for the course in working with regulators in my career. I think this current administration, it's been different. It's for the crypto space and for other spaces too, but in particular crypto space. I think, Josh, that the SEC recalibrated their arguments in Binance because they didn't want to be, they wanted to have a defense for if somebody said, well, Ether is now not a security, and how did that happen? And so I think that they've created a narrative in the Binance case to give them a defensible position as they continue to litigate some of these other crypto token matters. So that's my hot take on that. I think it's really important for people to pay attention to those committee meetings that you mentioned, Ron. The language in some of the meetings, especially against sort of movement in the crypto asset ecosystem, really leaves me with a question is, if we do have another Democratic administration, what does change? Like if senior members, on the House side and on the Senate side are still very bearish on the role of crypto in the greater financial services markets, does a new administration change that at all? Like, do they suddenly, is the movement going to be so significant that they come into line with a new administration? So it's something I'm keenly aware of, and I heard from a lot of my friends on the Republican side who said to me that, how isn't it going to be 4 years of the same? When you look at the House, you look at the Senate, and what the administration would be. But again, I think all of us, we need to have an open mind here and really listen to what's, Vice President Harris has to say. And then once we understand more what her views are, or what her surrogates say her views are, at least have that information before we put it all together.
Yeah. And David, real quickly, go ahead.
I know I have to run in a minute. So I just wanted to say on the market side, really looking to see here in the next few days if we can push through 63 on Bitcoin to 65, and then maybe get up to 67 and 68. So I'd really pay attention to see if we keep these gains or if it sort of sells off over the weekend. So that's what I'll be watching on the crypto front.
I'll be watching the same thing, realizing that it's probably going to be Smith and Walensky or some really nice steakhouse.
No chain restaurants for you, Ron. This is definitely an upscale experience.
I tried. Well, David, I know you got a hop, brother. Good to see you. Thank you so much. We will catch up over the weekend, and we will see you back here again next week.
Yes, I'll be down in Florida, and I'll be happy for the sun and the water. And see you all next week.
Sunscreen on the yacht, David. Don't forget. David, thanks so much. Josh, we've only got a few minutes. I wanted to spend a little bit of time with you, obviously plumbing the depths of some of the conversation around regulation. And I'm interested, you and I haven't had the opportunity to speak for a few days. It's been super busy. Have you seen any kind of change in how clients are coming forward, given what's coming up with potentially with the election? Are you seeing, and the reason I bring this up is we've had lawyer friends who are like, this is the busiest I've been in this space since I've gotten into this space. Now, you and I go back a long time in this space, but are you seeing the same thing?
I'm seeing a lot of activity.
Right.
I'm seeing a lot of activity. I wouldn't say it's the busiest time ever. I mean, the ICO boom was pretty busy and
Yeah,
like
fair
various
point.
other things.
Fair
Yeah.
point.
So I think, but yeah, this definitely seems to be a high point of the cycles that we go through. Yes, people are very excited, and as I think I've mentioned on some of our prior roundups, there are some people who are using, the timing of the election as kind of a benchmark for when they might want to launch things, or if they don't launch something by then, that they may, wait a little while after that. If but I think there's a lot of excitement. There's a lot of and frankly, even beyond the election, just optimism. I mean, even this rate cut, things like that. I think I've just seen a lot of activity and a lot of like really good, sophisticated activity. So, and
Not fly
across,
by night projects, like
yeah,
real. Yeah.
and across different types of entities. I mean, public companies, institutions, as well as protocols and projects, right? So it's like I wouldn't just say and potential funds, like it just broad, um, which is good.
Yeah.
And yeah, which is exciting. I will say, some of what is also interesting is I don't know if you saw the articles talking about McHenry and Lummis and thoughts about whether perhaps we'll get some crypto legislation at the federal level during the lame duck session.
Yep.
I mean, of course, McHenry did, I believe he was quoted somewhere. I can't remember where I read this, but he was quoted somewhere as saying sometimes the seeds that you plant don't sprout in your lifetime or something. Hopefully he'll still be with us, but certainly maybe in a different capacity. Yep. But it will be really interesting if they are able to push something through before the new Congress.
It's interesting, Josh, because yeah, absolutely. And we cover this, shout out to Dina Ellis and Adam Goldberg, who do our policy updates. And you and I have been on many chats with them, so much. It's interesting to see how some of the dynamic has shifted. I think not too long ago, the Senate leader for the Democrats, Chuck Schumer, came forward not too long ago and said, we might have legislation before the end of the year, which you and I have been around long enough to know that that's a far cry from the conversation a year or two ago in the Senate. So it'll be interesting to see where all of that goes, Josh. We've got a little bit of a short time now, so I just want to ask, what are you looking at in the coming week? And we've got a big event in October, but I wanted you to give your roundup and final thoughts.
Yeah, so my things that I'm looking forward to, other than client work, right, which is certainly a lot, is next week I'll be in Barcelona for the European Blockchain Convention. So excited for that. Hopefully I'll get to catch up with a lot of people in person. Other than that, not that I'm looking at this, so frequently, but I am curious about what's going to happen with the sentencing for Caroline Ellison and the SBF appeal. I mean, we're almost 2 years out from the fall of FTX. We're almost 1 year out from the beginning of the SBF trial. And I don't know, the outlook's looking quite different. So not that what I will say is I will not take a view on whether the appeal will be successful. I have heard from many that a lot of discretion is given to trial court judges, you
Right.
know. But I would just say, in terms of just a measuring stick of where we've come, just as you just noted about Chuck Schumer and the statement about legislation and the
Mhm.
view from the Senate,
Yep.
we've come a long way, baby.
We really, really have. And again, you don't wish anyone going to jail, but it is interesting looking at Caroline Ellison's potential sentencing. And I think her legal team has requested no jail
No.
time or something very close to that. I don't know what the federal guidelines are or what the prosecution has requested, but she cooperated pretty significantly. So it'll be interesting to see where that goes. And I don't want to make it the soap opera. I'm still waiting for someone to sell the movie rights to this entire story. But there's some pretty salacious conversation in a lot of the dialogue there. It is the ongoing drama is continues to be interesting, Josh.
Yeah. What about you, Ron? What's up your sleeve for the next?
Me, I am diligently saving money for David's steak dinner at the end of the year. No, all kidding aside, we are very, very busy with a whole bunch of stuff. And Josh, you chair the legal working group. There's a lot of activity happening. Pardon me, losing my voice already. October 24th, Josh, is where a lot of our efforts are going. Our big WSBA Crypto and Blockchain Summit 2024 in Midtown Manhattan. Josh Klayman will be on stage. David Brill will be on stage. 20 or 25 other speakers will be on stage.
Ron will be on stage.
I will be on stage. There will be a whole audience of colleagues across different verticals, banking and legal and tech and trading. So if you or folks in the audience happen to be in New York and you haven't registered, please go to the WSBA website. It'd be great to have you join us. And event planning is the hardest part of my life right now, Josh. So I'm losing my voice for a variety of different reasons, including the fact that I talk too much. So, Josh, we will leave it there. Thank you, everyone in the audience who joined us. We will be back next week. If you've got questions for Josh or David or I, please email us info@wsba.co. We will reach out to Josh and David, and we will be back here next week. Josh, see you again.
Sounds great. Thank
Bye.
you.